Hello and welcome to gotstockz. Today is December 30th, 2024. We were looking for a Santa Claus rally and we did not get one. So we're going to take a look at the Dow Jones Industrial Average. We're going to take a look at the S&P 500 and also the NASDAQ 100. And we're going to take a look at some key support and resistance areas to try to get a feel on the direction of the market so we can prepare coming into the new year to protect ourselves and to make some money. So we're going to start here with the Dow Jones Industrial Average. We're currently looking at a 6-month, 1-day chart. So we're going to come up to here and we are going to set up the exponential moving average. The black line is the 10-day moving average. The purple line is the 21-day moving average. The green line is the 50-day moving average. And the red line down here is the 200-day moving average. So what we want to do now is we are going to set up, we have the all-time high of 45,073.63. This was established on December 4th. We have a high of 45,073.63 and it closed at 45,014.04. And from that point on, we've been in a major downdraft. From that point on, been in a major downdraft. We had a little bit of a bounce here on this day. But we're going to come down here and we're going to look at these volume patterns. We're going to tell a story also. So when we come down to this area right here, this opened at 43,459 and change, and it closed at 42,326 and change. This is a engulfing candle. And when you take a look at this engulfing candle, what it did is it came and it repaired this gap that was established right here. So now this gap is considered repaired. When you have large gaps in the market and they take off, they call them gap and goes. Those gaps are usually going to be repaired at some point, either in a downdraft or in a gap down. To repair, this is a major imbalance in the market. This has now officially been repaired. So what is concerning is on December 26, 2024, the market hit a high of 43,373 and closed at 43,325. But this high, we've had a downdraft for the last couple of days. We were looking for a Santa Claus rally. It looked like we started to get one here and we were going to have a little bit of a pullback, but the market got smoked. The volume is light because during this time of the year there's a lot of people go on vacations and the volume levels dry up. But besides the fact that the market got smoked, if you look at this candle, when the market hit the bottom, hit a low of 42,263. We're going to draw a level of support there, 42,263. But look where it closed, 42,573.73. What that tells us is when the market hit that low, this is a level of support that was established and it came down and filled this gap. So this gap is repaired. We have a level of support. We had a nice little rally. And then when the market got smoked today, it came down to this level of support. The buyers came back in and pushed the market back up. Even though the market still closed down 418.48, the buyers came back in and pushed the market up. So that is a positive signal. That typically tells us that the market wants to trend higher in the short term. What we want to do now is we are going to draw a level of support coming back to this gap right here. This is going to give us a good level of support. We want to take a look at this on a monthly basis now. This is a monthly chart. So each candle represents a month. But what we want to look at is November. November, we had a lot of buyers came into the market and pushed it high. And then in December, we hit an all-time high and we've had a complete sell-off. And when we look at the volume for November, it was elevated from the past several months. And if we look at the volume in December, it's elevated from the past several months also. And we have an engulfing pattern that is developing. Market can change and go into a little bit of a rally, which that's what it looks like it wants to do at this particular point because of the candlestick that formed today. But now let's take a look at it on a weekly basis. Now we are looking at the Dow Jones Industrial Average. This is a 5-year weekly chart. When we zoom in on this, let's take a look on a weekly chart and see what we have. Here's our high, and then that week we close lower. The following week we close lower. The following week we close lower. We have some buyers come in. You see this wick. The buyers, once the market hit this bottom, they pushed the market back up. And then you can see we had some buying coming into the market. It's just not powerful enough to sustain the move. And now we've gone down and we've retested this area here, which is the gap when we go into a daily chart. It's real important to do your due diligence and to look at the monthly, the weekly, the daily charts. And depending on what type of investing and trading that you're doing, it's a good idea to look at it from all angles and all aspects so you can get a better feel of what you think the market's doing. And right now it appears, by looking at the chart, we have a lot of downdraft that is happening, and the volume spiked here. The volume picked up a little bit on these 2 weeks. This buying power that came in, look at the volume, is minuscule. I know it's December, I know it's the holidays, but it doesn't matter. The volume is light and it pushes down. Now this particular candle right here, the buyers have stepped back into the ring. Let's see what they're going to do. That's what we're looking at right now. It looks like the buyers are going to come back into the Dow Jones Industrial Average, and they're going to push this thing up a little bit. What we want to keep our eye on, 42,268, and then we want to keep an eye on 43,373. It appears that the market wants to push up into this area. Although there are no guarantees in the stock market, things change minute by minute, but this is just based on a technical analysis, looking at the charts, looking at the candles, looking at the volume. This is what appears to be what is happening at this particular moment. So it looks like we're going to start pushing up a little bit higher. The key is going to be, when it hits into this area, what it needs to do to recover from all of this downdraft. It needs to break through this area and then come back and retest it. Needs to consolidate for a little bit and form a base so we can go back up off to the races to the all-time highs. Now this is the Dow Jones Industrial Average. Thank you for tuning in. I hope this video was helpful and brings value to your process. Be careful when trading and investing in the stock market. It's very risky, and always remember to dot your I's, cross your T's, and don't forget the Z. Happy investing.